Okay, welcome everyone. Thank you so much for joining us this evening webinar about creating wealth accumulation system to be financially stress-free. Okay, and how our financial gym can help you to do so. So of course, today what you should think back is, hey, what does it mean by creating wealth accumulation system? That's one thing. And the other thing is, hey, what is this financial gym? Why is it necessary to build up your investment knowledge? So this is the two main things that you should bring back today. Intro myself, for those who are meeting me for the first time, hello and thank you so much. My name is Emin. CFA stands for Chartered Financial Analyst. I'm an MD and founder for this company called Invest Coach, regional investment speaker, resident trainer for SGX Academy. So I believe many of you actually know me from SGX. And interestingly, now I've been talking more to people outside of Singapore. In fact, yesterday just did a session for a lot of Chinese investors. Quite interesting. I think more and more Chinese are actually going to invest in Singapore. So they recently, because of the country's policy, they're actually allowed to invest overseas. So we do expect some funds from them. Very interesting. And of course, we have Jimmy. Jimmy, you want to just say hello to everybody?
Hello everyone, my name is Jimmy. So I'm a co-founder of this program, Financial Gym. So I'm an investor, I'm a trainer as well, investing for almost more than 15 years, adjunct lecturer for Nanyang Polytechnics. So that's a brief introductions about myself, and I will talk to you all later in the sessions. Thank you.
Okay, thank you so much, Jimmy. Okay, so of course, standard disclaimer, make money, be happy, lose money, don't score us. We are here just to provide education. So hopefully all learn something today. And basically have fun, it's a Friday night, right? TGIF. Okay, so before we start, maybe those on Facebook, if you just join us on Facebook, welcome. Thank you so much for joining us again. Do us a little favor, please click on the share button so that more people can enjoy the information we have today. Okay, now, let's talk about investing. As I always preach, please, before you invest, okay, before you put your money out of your pocket, please begin with the end in mind, or either that, ask yourself this question: why are we investing in the first place? I have been a professional investment trainer, not trader, educator, over the past 10 years. And interestingly, I realized there's a lot of retail investors, they really invest for entertainment, for recreation. So if you ask them, to them, it's like, I buy this stock, wow, if the price increase, good, make money, I'm happy. Then maybe I just eat better. Then if I price drop, then I keep quiet, better don't let my wife know. Then obviously over long term, you are going to lose. If let's say that is your objective, I'm just here for fun, I'm here for recreation. Okay. So really, if you want to be a successful investor, you want to grow wealth over time, you need to ask yourself this question: why are we investing in the first place? Okay, there are a lot of people will say, yeah, I know what, I want to make more money. The question, how much more? Okay, so these are the questions you need to ask yourself. You need to set a very clear objective. Then there is a good chance for the achieve. I want to just share with you all my story. So this is my story. Obviously, I'm an investor myself. I definitely don't invest for fun. And in fact, I am so serious about investment that, I put my whole career into it. So why is that so? Because I actually sat down with my wife, some time back, to do our retirement calculation, basically do our retirement calculation. So this is similar to what we did. So of course, I actually changed the example today a bit to actually make it easier for you to understand. But basically, this is what we did. We actually calculate how much we are going to need for our retirement. Okay, so to do so, I actually calculate how much do I need today first. Okay, how much do I need today? I split by basic expense, food, transport, utilities for 2 persons, for me and my wife. So basically, for us to sustain our lifestyle today, we need about 3150, as you can see here. Of course, we cannot just survive just by basic. We have to talk about some luxury item, traveling, donation, fine dining, so on and so forth. So probably we will spend about $800 per month on luxury item. Okay, net is actually about $4,000. So to sustain our current lifestyle today, we need about $4,000 based on the current costs. Okay, so I'm talking about my retirement, which I think is going to be like 20 years later. Of course, 20 years later, the same basket of goods won't be the same price. So let's be very academic about it, using 3% as the inflation rate. Let's assume that the price increased by 3% every year. Okay, 20 years later, the same basket of goods will actually cost me about $7,149, as you can see here. So basically, for me to retire comfortably, I need to have like a passive income of $7,149 per month. Okay, so that I can retire while maintaining my current lifestyle. So is it easy to achieve this number now? Let's take a look. Okay, so let's say do me a favor, okay? So please maybe help me, but please help to participate by just sharing your answer in the chat. So let's say I need $7,149 per month. Okay, let's make things simple. Let's say 7,000 per month, 84,000 per year. So 7,000 times 12, 84,000 per year. And let's assume that I can generate 6% return from my investment fund. Okay, so here's the thing. I need to have an investment retirement fund, and this retirement fund, I can generate 6% return. So what should be the retirement fund size be so that every month I can get $7,000, every year I can get $84,000? Can I just trouble someone to key into the chat? What should be the retirement fund size be? Okay, so that as a 6% return of the fund, I can actually get 7,000 per month or 84,000 per year. Anybody, please? Okay, someone actually said 1.4. Anybody else? Anybody else? Maybe just wait for one more answer. Anybody? Of course, those in the Facebook, please participate as well. Okay, so it's actually good to go through this calculation. So I think the more you participate, the more you can learn. Anybody else? Anyone else can just share the answer. Someone actually said 1.4 million. Nobody. Okay, one more answer. Anybody? Anybody? Just one more answer, please. Okay, looks like we have a very shy crowd today. So yes, the answer is 1.4 million. I basically need 1.4 million so that I can retire while sustaining my lifestyle. So the question here is this: is it easy to achieve 1.4 million or not? Or basically, this is how I set my investment objective. I need 1.4 million in investable assets, a fully paid property. Then I can retire comfortably, okay, maintaining my current lifestyle, because I can generate about $7,000 per month. Okay, so of course now retirement is a lousy word. So basically we call this, if I can actually achieve this, I have achieved financial freedom. Financial freedom, okay, whereby my passive income can cover my expense. So this is how I set my investment objective. So once again, for those who join us today, please, before you talk about investment, go and ask yourself, what is your investment objective? If you don't know what you want to achieve, okay, if all you want is more money, okay, you are bound to fail, full stop. You have to be very clear exactly where you need to go. Then there is a good chance for you to be successful. So investing is like everything else. You need to know where you go, then you can achieve. So this is my story. Hopefully can give you a good reference. Now, is it easy to get 1.4 million? Let's be academic about it. So let's say I am like most other Singaporeans. So I actually have statistics to help me back up this point. So in fact, for most Singaporeans, their money is only growing at 2%. Why is that so? Because their money is either in CPF or in bank accounts. Statistically proven. This is where most Singaporeans put their money in, either in the bank FD or in CPF. So average, let's say, give you 2%. So let's say I need to accumulate 1.4 million 20 years. Every year, me and my wife need to save like $57,000. Every month, we need to save $4,008 every month. Cannot earn, save. Save. Okay, so do me a favor. Let's do a little poll here. Is it easy for a couple to save $4,008 every month? If you think it's a yes, tell me key a 1 on the chat. If you think no, it's actually tough, please tell me key a 2. Okay, thank you. Thank you so much. Thank you so much for your response. Okay, so it's actually not so easy to actually save. We're talking about save. So generally speaking, we will save about 20% of our income. So 4,008, that means our combined income has to be about 25,000. Not easy, not easy. Okay, so hopefully I actually, drive the point across here. A lot of people thought that investment is for those who are greedy. Investment is for those who want to get rich quick. Not realistic. No, in today's context, a lot of time investment is a need. Okay, investment is a need. If let's say if you don't invest, okay, there is a very high chance that when we retire, we actually need to lower our lifestyle. Because very straightforward, we don't have enough. Okay, so in fact, I don't need 20 years. I think today you look around us, there are enough examples. Like let's say for those who are retiring or retiring today, of course not everybody, but a number of them, because they didn't prepare, very likely when the day they stop working, they have to lower their lifestyle. Okay, so hopefully I can actually help you change some perspective about investing. It's not just about more money or make money quick. No, because a lot of times we actually need to do so that we can sustain a lifestyle. Okay, so of course, let's say we all agree, yes, investing right need. Okay, I need to clear another myth here. A lot of people say investing means what? Get rich quick. Want to make quick money. Buy today, sell tomorrow, buy today, sell tomorrow. Okay, that's investing. No. So a lot of people thought that, yeah, so easy. Buy here, sell here, buy here, sell here. So easy. But of course, in the real world, that doesn't happen. A lot of times, this is more likely to happen. In fact, even for myself, when I actually start off, so when the market came down, then rebound a bit, seems like, okay, wow, look at rebound, better buy. After you buy, how come after I buy drop? Okay, this time rebound, I better don't trust, I better wait a while. Wow, well, rebound for so long, it should be quite okay. Then okay you buy. After you buy drop again, then you quickly go and cut loss and sell. Then rebound again. Then what? I want to quickly buy to recoup my loss. Then I'm quite sure many of people who have been trying to buy low, sell, probably will have the same experience as me. So in the end, you have been buying high, selling low. Okay, so this is definitely not what investing is about. Okay, buy low, sell high is definitely not what investing is about. Okay, again, I want to share some statistics to prove my point. So let's okay, for those who know, please share. Okay, of course, for those who don't know, make a guess. Okay, yes, there is a group of traders that can consistently make money from buy low, sell high. Okay, traders are talking about traders. They're actually a group of people. Okay, every day just go in, buy, sell, buy, sell, buy, sell. That can consistently make money from buy low, sell high. But the question here is this: how many percent of the traders can do so? Can I get just someone to help to key into the chat? How many percent of the traders can consistently make money just by buy low, sell high, buy low, sell high, buy low, sell high? Anyone can just make a guess. If you don't make a guess, definitely not 10%. 10% is too high. Thank you so much. It's actually between 1 to 5%. 1 to 5%. Okay, so there's some statistics. If you want, you can just go and Google about it. Only 1 to 5% of people who do this buy low, sell can consistently make money. Okay, so my point to here is this: if you really want to make money through buy low, sell high, or invest through buy low, sell high, so please be that 1 to 5%. Okay, I'm not saying that this is impossible. I'm saying it's possible, but only 1 to 5% of people can do it. if you want it, please be there 1 to 5%. And of course, very likely they are professional traders now. Like my friend who actually spent 18 hours per day. I got this friend who actually spent 18 hours per day to be part of that 1 to 5%. Okay, if you tell me that maximum you are willing to spend is 3 hours per week, and you want to be that 1 to 5%, sorry lah. It's just like me saying that I just need to swim once per week, I can beat Joseph Schooling. That's not going to happen. Okay, so really have some context about investing. There's no such thing as the best investment, best way to invest, only what is most suitable. Okay, so like for example, Jimmy is here. He actually can leave me a point. Now, a lot of people say they invest in Bitcoin. Then after that, I have to ask this question. Invest in Bitcoin. Can you explain to me what is blockchain? If you don't even know blockchain, then you tell, what is Bitcoin blockchain? You are gambling, full stop. Okay, you are gambling, full stop. But Jimmy is different. You ask him what is Bitcoin, blockchain, crypto, he can explain to you until you cannot take it. I think he can spend 10 hours explaining what's the difference, what is CoinHako, what is Binance. He is investing. Okay, yeah. Jimmy, I'll let you share more later. So my point here is this, there is no such thing as the best investment, only the most suitable. So as a professional investment trainer for the past 10 years, I have doing some research now. Okay, so I realized for a retail investor, how I define a retail investor, someone with a day job, probably maximum can spend about half a day per week to look at investment. Okay, you will have a higher chance of success by accumulating wealth over time. You want to make quick returns? Can quit your job, go and become a professional trader, be like my friend, I spend 18 hours per day to look at stocks. Okay, if not, okay, you will probably have a higher chance of success by doing this thing called accumulating wealth over time. Okay, so this is what I do personally. Okay, I'm not a trader. Okay, this is what I do personally. I have set up different systems to help me accumulate wealth over time, which are what we call wealth accumulation systems. So obviously, I start off with share investing. Okay, so the way I invest is always long term. Okay, every time I buy, I'm prepared to hold for 3 to 5 years. Okay, because that is the one only makes sense. I don't trade. I don't like buy low, sell high, buy low, sell high. No. Okay, every time I buy a stock, I'm prepared to hold for 3 to 5 years. And of course, along the way, I actually get dividends. Okay, I get capital gain. So basically, to me, investing is about having investment structures for me to invest regularly. That is what investing is about. Setting up investment structures for you to invest regularly. Okay, if you just buy low, sell high, so you are just basically gambling. So for me, is having this investment structure. I invest regularly. I make my money work harder for me on a long-term basis. This is what investing is about. Okay, so after a while, okay, as I mentioned, okay, in this case, you are basically snowball your savings with capital gains and dividends. So one way for you to see it is like, okay, instead of putting your money in the bank, okay, my stock market is my bank account. Okay, my stock market is my bank account. My savings put in the stock market like a bank account rather than put in the bank per se. Okay, after a while, I also realized that hey, a lot of times we need to put money in certain instruments regularly anyway. Why don't we see them as investment systems? Okay, like for example, all of us who have CPF, if you are Singaporeans or other working here, okay, very likely you have insurance, and of course you're going to have property. So why don't we actually see them as investment instrument anyway and learn about them so that you can maximize the return from there? Okay, I just want to give you an example of the CPF, one of my favorite story. So Jimmy, bear and me, I know you heard this story for like the 100th time. Okay, you know, I have my
No
mom
problem,
is
sir. Yep.
okay, so my mom is of certain age already, and obviously she has to visit the hospital now and then. Okay, and a lot of times after the visit, the nurse will always ask us, so how do you want to use MediSave to pay? Okay, so we will always say no, I want to pay cash. The nurse is always very puzzled. Hey, how come you want to use cash? Everybody using MediSave. So for us, we always very puzzled. Like, hey, MediSave give us how many percent? 5%. Eh. My cash in the bank give us 5%, 1%. Eh. So why are you using something that give me higher return to pay? Okay, of course, I know this is not for everybody. Yeah. Okay, I know that there are people who may not have the option. But here's the thing, do you even consider all this before you make the decision? Okay, so in fact, after that, I'm quite sure now a lot of people here, there's even this movement called 1M65. You can actually even use CPF to grow your money to become a millionaire. But you have to know exactly how to use it. So of course, so and so forth, and how it's property, even you are talking about your own property to stay on, how does it become an investment system? Okay, so these are the things you have to learn to make sure, since you're putting money there anyway, why don't you make the money in all these places work harder for you? Okay, of course, I also have REITs investment. So eventually, when I am probably at 60, 65, most of my money is here. Why? Because for REITs, it's actually very stable in giving dividends. So my 6%, very likely most of them will actually come from here. And of course, at this juncture, I start building this REITs portfolio already. And lastly, you also need to diversify against risk. So again, of course, this is not for everybody. So I realized that, actually about 90% of my money are all in Singapore, especially if let's say your property in Singapore, about 90% at least is all in Singapore. If you can afford, it actually does make sense for you to put some money overseas. Okay. But then, want to invest overseas, not easy. You probably want some professional help. So that's what I actually did with regular saving portfolio using unit trust and ETF. Of course, later Jimmy can actually help to explain a bit more. What is it we mean by creating an ETF portfolio? So this is now I have now 6 wealth accumulation systems. And if you ask me, okay, this is what investment should be for a retail investor, someone who has a day job, someone who actually can probably spend about half a day max on a week to look at investment. This is what investing should be for you, okay? Creating wealth accumulation systems. So once again, what is a wealth accumulation systems? Investment structures to invest regularly. I basically put money on all these different systems regularly. Some is monthly, some is annually. Insurance, some of my insurance is annual. Okay, but it's regularly to eventually snowball your wealth, okay, letting your money get higher returns over time. Okay, so at the same time, you need to have a defense mechanism. Okay, like for example, my CPF insurance. So last year, because of this, I have a lot of peace. Okay, as you all know, last year the stock market dropped 30%. But in fact, from a portfolio level, I only lost by, if I remember correctly, is 3 or 5%. Okay, for obvious reasons, my endowment, the money is still there, CPF money is still there. So in fact, this is where I put my emergency fund right now. Okay, I'm not sure a lot of people know about this. For life policy, there's actually a cash element. Anytime you can take the cash out, not affecting your insurance. Okay, so instead of me setting additional cash somewhere as really emergency fund, no need. I really have this, so my fund can be better deployed. So this is why I have different defense mechanism. So for property, you get returns from leverage and forced saving. And since you are doing that anyway, for a lot of people, when we actually buy property, you need to borrow money. Okay, since you are doing that anyway, why don't you actually learn about it better and make sure the money work harder in a more risk-adjusted manner? And of course, you have risk diversification. So this is the reason why I actually need different systems, because all of them have their pros and cons. Putting together, okay, I am eventually going to have a very good engine, so 6 separate engine working for me to snowball my wealth, okay, to help me manage the risk. And if you ask me, this is what investing should be. Setting up all the system, then after that, feed them regularly and eventually see your money accumulate over time. This is what investing is about. So if let's say there's only one thing you can take away from this webinar, hopefully this is the message. This is investing, not buy low, sell high, not asking Jimmy later, Jimmy, can give some stock tips? No, that is gambling. What is investing? Setting up all these structures. This is what investing is about. Okay, so I have coined this term. After you set up these systems and you implement them, let it run, you will actually achieve this state, what I call financially stress-free. Okay, financially stress-free, which is you have enough for today, you are prepared for unforeseen circumstances, and most importantly, you know that you will have enough for the future. Okay, and this is what I mean by being financially stress-free. And hopefully, through our programs, we can empower more people to be in this state. Why? Because I have, of course, worked for a while, about 20 years. Unfortunately, I don't see a lot of happy people. In fact, now if you talk to someone which is about 40s, you talk to them, what is your dream? Very likely they will actually give you a very good scolding. What dream? Okay, every day I just have to think of how to make money to pay all the bills. And worse, a lot of them don't even like their job. Okay, can you imagine your lifetime? You spend most of your hours working you don't like, and eventually you just give up your dream. Okay, so really, if you ask me, investing is about, set up system, know that you're financially stress-free so that you can actually focus on the more important things in life. And that is really what me and Jimmy try to hope more people can achieve this state of mind. Okay, life is definitely just not just about money to pay bills. There are a lot more things that we should, spend our life on.
The next 30 minutes, what I'm going to talk about is basically 4 things. What is ETF in short? What are the benefits? And how do you actually grow wealth with ETF? And then the potential returns based on the portfolio that you select, whether you want to be aggressive or more aggressive, or whether it's going to be income type of a portfolio. All right. So in short, ETF is called exchange traded fund. And the reason why it is called exchange traded is because ETF itself is being listed in the stock market, just like shares, but it is basically a fund. All right. And that means to say that it's like a unit trust whereby you have a basket of companies put together as a fund, but instead of managed by what we call the unit trust people, they actually list the whole funds in the stock exchange. Now, the beautiful of ETF is that the price of the ETF are instantaneously. You can actually see the buy and sell, very transparent, just like stocks. Whereas unit trust, you have to go through agent, banks, or fund manager, or specific institute, to trade those unit trusts. So that's the beauty part of the ETF. So when we talk about ETF in general, people will say, oh, ETF is basically an index fund, something like a STI ETF or S&P 500 ETF or Dow Jones ETF, that sort of things. But actually ETF is more than that. Now, the reason why people are tracking index fund itself is basically people are tracking the economy of a particular country. So, for example, like today, if all of us will want to invest in India, or if you want to invest in China, it is very difficult for most people, to go up there and start to buy foreign shares, especially in a market that's not accessible. For example, like China, it is, unless you open a brokerage house in China itself, basically for most people like us, there's no access to the market over there. So the only avenue for us to invest in those countries is through ETF. So it can be China, India, Hong Kong, even Vietnam. Vietnam economy is definitely booming. The economy is growing like between 15 to 20% per year. So you can go up there and buy a Vietnam stock market ETF as well. So that is basically more towards the index stocks. Now, the index itself, although it's tracking the countries, but ETF itself has actually expanded widely. Till today, there are more than 8,300 ETF listed in the market worldwide, globally. And so we are not just only talking about Singapore itself, but we are talking about ETF that's been listed all over the world. And the reason why we are looking beyond Singapore is because there are a lot of very interesting ETF that will actually allow us to build wealth fairly quickly. And the best part of it is that it can be adjusted to your risk portfolio, all right? And those kind of a risk portfolio that you adjusted, you can actually tends to be a little bit more aggressive towards a particular sectors and things like that. So the reason to invest, there are 5 major benefits to use ETF as a wealth accumulation tool. Number 1 is diversifications. Just like what I mentioned earlier, when we invest in SGX or STI ETF, mainly we are only dealing with local market, all right? And as we all know that in today's context, local market is no longer what we see. Our horizon have to be look further than that. So diversification by geographic is definitely one of the areas that we are looking into. Now, the second part benefit is cost effective. Now, why do I say cost effective? Compared to unit trusts, compared to individual stocks, the cost of investments using ETF is relatively inexpensive, right? I pick it for example, let's say if you want to buy a unit trust, the upfront sales cost plus the management fee, we're talking about approximately of, even with a discount, or even if you get a good discount, we're talking about approximately about 1.5% to maybe about 2% in today's market, right? If you go up there and buy individual stocks, let's say supposing you buy SGX stocks or DBS stocks in Singapore, you are talking about a transaction fee of about $10, if you're a custodian account. But of course, these days you have, inexpensive brokerage fee, like Tiger, Momo, and all these things that will only cost you about $1.99, if I'm not wrong. But still that, if you add up with all the counters that you buy and you add up all these transaction costs, it actually costs quite a bit, as compared to an ETF, it's only a one-time fee of a management fee of, let's say, approximately about 0.6 to 0.7%. Now, all these fees are very important because investment is just like doing business. So as a businessman, what we want to do is to maximize profits and reduce expenses. And same thing. So when we invest in ETF, what we want to do is that we make sure that we will always maximize the return and spend as little as possible in terms of expenses. All right. The third part of it is about accessibility. Like what I mentioned earlier on, if you are looking into invest into different countries, different sectors, or different areas, ETF is probably the only inexpensive tool to access to the market. So for example, now some of you all would know by now, in fact, all of us would know by now, the next trend coming up is electric vehicle. Now, there are so many electrical vehicle companies around, right? The EV companies, and which one to pick. You wouldn't know which one to pick, isn't it? It's not easy stuff. So you can go up there and buy a EV ETF, right? And the thing is that the fund manager will already select all these companies for you. You don't even have to worry about choosing which company to invest. The fund manager, which is a professional manager, they basically manage the portfolio for you. They already pick the EV companies for you and they put it inside ETF. So all we need to do is just go up there, just buy the EV ETF. That's it. Simple, right? Straightforward. So the level of involvement is less in terms of operating, understanding the need, the technology within the funds itself, but we more or less focus the returns, on the ETF, and that becomes, make our life a lot easier in terms of, automating and accumulating our wealth. The fourth reason is transparency, like what I mentioned earlier on. Unit trust price is never transparent. The only way you can check your unit trust price is through your Bloomberg apps, or you have to type your unit trust code to Google, and then they will just reflect the price. And usually the price is not real-time price. By the time you want to buy or by the time you sell, there's always a slight differences. All right. Browse ETF when you open up your platform, whether is it through Kim Eng, DBS, or Tiger, or Momo, or whatever. The price that you see is the price that you wish to buy or sell. Is very, very transparent. All right, and the charges are very transparent as well. What makes it even better is that in today's market, there are a lot of brokerage firms that offer free transaction costs. So virtually, that kind of transactions become inexpensive, and that will also means that you will be able to accumulate your wealth faster, through such accumulating systems. And then the fifth one is probably the one that I love most: flexibility. Because when you are talking about a thematic type of investment, a team investment, there are times that we need to balance our portfolio. And of course, that I won't go into details of balancing, but then take it the fact that at times, from time to time, we need to adjust the number of units that we hold inside the portfolio. And having the flexibility that I can go up there and change those ratios and percentage of ownership of a particular funds allows me to make my funds more efficient, right? Meaning to say that it will gear towards a higher return compared to, I just buy a stocks or other means of tools. So flexibility is really what I love most by using ETF to form my portfolios. And of course, more importantly is, in terms of investing in areas which I typically not too familiar. So for example, like myself, I am not familiar with genomic, which you're talking about sequencing DNA, that sort of stuff. But I know that it is a growth area, all right? And if I would like to invest in these kind of companies, it is almost impossible for me to invest because I have zero knowledge about the stuff they are doing. But having a genomic type of ETF will allows me to just simply go up there and buy the funds. And of course, how we select the fund, that's another different topic. But the whole point is that I can go up there and buy the fund and to be parked on there and make sure that the fund will grow continuously for me. So that's also one of the advantage of using ETF to create my investment portfolio. So So other than index fund, is exactly what I was trying to mention earlier, is about team investment. Now the team investment is the most important concept when we come to choose an ETF. Because other than index funds are basically more of a broad market base, right? We are talking about a general economy, whether we are talking about STI, the Hang Seng, or the China A50 or S&P 500. We are talking about broad market. But team investment give us a different perspective. It's like we can actually invest in the high growth area. And this is where we are coming from, right? If we are able to invest in a high growth area, our growth will not only limited to just 12 or 14%. We are looking beyond that, more than that. It could be 15, it could be 17, it could be 20, and depends on how we manage the portfolio itself. We can do this consistently, doing something like a 15 to 17% per year is quite possible. In fact, it's very, very possible. And it doesn't really have to take much risk as well. Later that I'm going to show you example of how do we do that, but just bear with me for now. So in ETF team investment, you can see on your screen, it can be divided into various types of sectors. It can be transportations, it can be banking, it can be constructions, it can be financial services. So there are team, you can pick to choose, all right, to choose the ETF to invest. And each of these teams will have a different growth rate. And of course, it comes with different risk level as well, right? Not all ETF are created the same. But as long as you understand how does it work, how does it functions, how do you adjust your own risk portfolio, you can actually use these as a very, very powerful tools, all right, that's been created for you to invest even in some of the areas that you are not too familiar, all right? Of course, as I said, again, I keep stressing the word risk, meaning to say that, when we create a portfolio, there's always a certain level of risk tolerance that we need to build into as well. Now, I give you an example, all right? So we have a transport as a service ETF. So transport as a service ETF, we are talking about robo-taxis, we're talking about driverless car, we're talking about autonomous vehicle and things like that, all right? Why is it called a transport as a service? Is these days, or rather in the world going forward, all right, people will tend to own less of a physical stuff. Who will agree on this? That means people will not buy too many of the assets. They will rather share things, like a car or workspace and things like that. Who agree with this? If you agree, can you please type a 1? If you don't agree, you type a 0. Okay, I can see a lot of people agree. So it's good. If you believe that the world going forward is going to be what we call a sharing economy, that means a lot of things that we see today is called whatever as a service. So transportation as a service is basically a car sharing economy, basically. So regardless of workspace, living space, car transportations, or even delivery, like for example, Grab Food and all this deliver man services. Company these days, unless you're talking about huge company, most smaller SMB these days, they actually go up there and hire, use what we call go-go van, or Ninja van, that kind of things, this kind of service to help them to deliver goods, So no longer companies actually owns their own vehicle or hire their own drivers. And this is basically part of what we call transportation as a service. Now in US, the transport as a service is a very, very big thing. It's so big that not only the physical services, but because of the technology behind it, the AI, the mapping, the trackings, the collections, the payment, and things like that. So if you understand that kind of business as a concept, now to invest in all these companies, unless we are talking about you are really, really good pick, unless you are really in the industry, maybe you work for Google, maybe you work for Facebook, or you work for Uber. Yes, you have all that first-hand information and what is going forward. You have that vision, so you can invest in those companies. But for majority of us, we may not have that knowledge, to understand about the company. Then picking an ETF, such as a transport as a service type of ETF, make a lot of sense, all right? And for such ETF, the growth rate we are talking about on annualized growth on 36.37%. And that's the kind of growth that we are looking at. And this is huge, this is huge. And trust me, if you all believe that sharing economy is the future, then I would say look into transport as a service type of economy ETF will be one of the way that you can grow your wealth faster by just investing in their ETF. So whatever that we see today here, all right, whatever we see today here, Grab, Uber, Lyft, and that kind of stuff, this is not the end. We are only at the beginning of exponential growth. What Google is doing now, what Tesla is doing now, what is NIO is doing now, what is BYD is doing now, they are, the world is going to become a very different place from what we are seeing today. Okay, so for example, back to this transport as a service ETF, you look at the company they are in this ETF. You have Google, the number one, all right? The second one is Toyota. The third one is NVIDIA, which is an AI company. Then you have a chipset company called Intel. Then you have Daimler. So you can see that by just buying into just one of these ETF, you own all these great companies. You actually own a part of this company. Isn't that great? Instead of just trying to figure out and buy Google shares. How much is Google share right now? Can anybody tell me? I think it's $2,000 over. $2,000 over. You can't even buy, with $2,000 US, you can't even buy one Google shares, right? So ETF help you to solve these kind of problems. You buy one ETF and you own all these great companies into one basket. And why not, So it is actually one of the great tools that you can use. I give you another example. Who believe that artificial intelligence will become a major part of our economy in the next 10 years? If you believe, can you please type a 1? If no, can you please type a 0? Artificial intelligence. So everybody agree, Can I say that everybody agree? Nobody disagree, Okay, so the point is this, if we believe that AI is going to be part of our world in the next 10 years, believe me or not, the way that we do things today will be very different 10 years later. Now, when we are investing in companies, do we invest now or do we invest in future? For now, you type a 1. Sorry, for now, you type a 0. For futures, you type a 1. Who believe investing is for futures? You type a 1. Thank you. When we do investing, it's not because we look at what it is now. What it is now is not important really. What is it now is you should have invested 5 or 10 years ago, not now. So today we will invest into long term, 5 years, 10 years from today, right? So if you believe in AI companies and AI services, then why are we not investing in these sectors? Ask yourself these questions. Very, very logic questions. All right. The question here is that we dare not invest in AI companies because we don't understand AI. What is the kind of a neural network, the SQL, whatever, jargons that they use in their world. We don't understand. We don't even know how to apply, So the point here is that we may read a little, we may read a little, we may have a concept of what is going on, but we can go up there and pick a good AI ETF, all right? And this AI ETF has to be everywhere. It just not need to be in US or in a particular country or in a particular place. It can be anywhere, right? An AI that is being widespread all over the world, and AI will be able to help us, to grow the economy together. And would not this be a kind of a ETF that we should be having it in our portfolio? All right. So ask yourself these questions, and then everything will start to make sense. So for this AI ETF, you can see that the spread is geographical diversifications is you have 50% in US, 18% in China. And I think China AI is growing because of the IT advancement that they are putting effort right now. So AI definitely in China is definitely growing. You have Japan, then you have Taiwan, you have France, and of course you have Korea and things like that. So these are pretty widespread in terms of geography. In terms of the type, you have your informations, your communications. Communications will include your social medias, and then you have industrial and consumer discretionary and healthcare as well. So these are basically the kind of the diversifications within the ETF itself. Now, just now Ibin talked about regular saving plan, right? And this is exactly one of the things that we can do to diversify our risk, or rather we can sort of like manage our risk in one way or another, is through a regular saving plan. What it does is that for those who are not familiar with regular saving plan, it's like you set a sum of money. It can be anything from $200 or even as low as $100, right? And tie it on with the platform like either DBS, OCBC, Poems, or FSM1. What happens is that every month they will deduct that amount of money from your bank account automatically and invest in the ETF that you select, right? So let's say supposing if you pick 2 ETF to invest in a month, then you set a sum of $1,000. What the platform will do is that they will just deduct that $1,000 from your bank account and automatically invest in the 2 ETF that you select. And you can do it through this 4 platform. So with this, again, it takes away one problems, or rather one hassle away from what we call the investment decisions, right? Because you only need to decide first time. And then once you set it up and let it roll on automatically. Now, the thing is that we all have a very busy lifestyle, right? And I wouldn't expect everyone will be like myself or Emin, who would, spend at least 2 or 3 hours in a day, will look at the stock market, look at companies and things like that, because you all will have a different lifestyle. You all would have, have busy things to do. So RSP becomes one of the very, well, I would say the most easiest approach towards investment and using ETF as a tool. So that's what regular saving plan is all about. Now I will give you an example of how we do it. So let's say, for example, I've been a very, very conservative, and trust me, guys, ladies and gentlemen out there, although I do quite a bit of funny things like Bitcoins, cryptos, tradings, and even do futures. But in general, I'm still a very conservative people. So I do look at income and I do look at growth at the same time. I have different tools, which we call a push-pull mechanism to help me to balance things out. So a typical this income type of a portfolio in today's world, and if we are look at more towards Sing dollar nominations of between 4 to 5%, this is the kind of a ETF portfolio that I would do, So I have 50% of this in STI ETF, which is a Singapore stock market, the 30 blue chip companies in Singapore. I invest in them for 50%. I would invest 30% in REITs ETF that will consist of your Mapletree, your Fraser, your Kaplan, the REITs. I would put 10% in gold. That's basically is to hedge, all right, against inflations and things like that. Then I will also put 10% on bonds just to make sure that the portfolio itself will stabilize, right? Now, by doing this, what this portfolio is projected to be is between 4 to 5%. And the payout is actually quite good. It's in Sing dollars. So if you're looking more towards a Sing dollar type of a regular payout, maybe twice a year or maybe even 3 times a year, this kind of portfolio beats your FD. FD right now I think is 0.3 or 0.5, I can't remember, but it sure beats FD. All right. Now, if I would want to be a little bit more aggressive, to take a little bit more risk, now you look at what you have on the screen. I still have 20% on STI ETF, which is nominated in Sing dollars. I have 40% on REITs. So the first 20 and the second 40, it will add up to be 60%. This is going to give me a fixed income. That means to say I will still get dividend from these two asset class on a regular basis, right? Then the third one, I pick a team investment, which is why I say the growth area, the high growth area. Let's say I put it 20%. And then I invest another 20% in US market, S&P 500. S&P 500 pays, I think, after all the deductions, I think you get back about 1% dividend. So I wouldn't consider that as a dividend at all. I just consider it as it's a growth index as well. With this, I would expect a year, all right, every year would in between 12 to 20% kind of a growth, right? Depending on the team investment. So you see that with this portfolio, I'm actually managing my risk by having 60% packed into Singapore dollars, Sing dollars kind of a return, And then the other 40%, one is S&P 500, which is predominantly being proven over the last 15 years. It has been growing on average of 12% per year. And then team investment is the one that I can choose. All right, I can choose to buy or sell when I do adjustment, in my portfolio. So for example, like if I feel that the artificial intelligence has getting a bit weaker and it's not going anywhere, or if I spotted there's another new opportunity in other ETF, I can always switch my regular investment portfolio from artificial intelligence to other team, all right? And that basically is how I manage the risk using ETF itself. Now, how is it going to impact you? And then, of course, all this becomes, if I just keep on talking about 40%, 30%, you have no idea what's going on. So I just put all this thing into perspective in numbers. Let's say if you have $1,000 to set aside, all right, and per month, and then you pick a RSP program, which is similar to this, which is income portfolio. The total investment in terms of dollar value over 10 years period is $120,000, but your 4% growth will allow you to accumulate up to $156,000. All right, so that is straightforward on this. Now, if I would do a second one, same thing, $1,000 over a period of 10 years, but this time with a slight change in just the one of the components, one of the ETF, I change it to more of an aggressive type. The growth would be 3 times more, approximately 2.5 times more. You end up $316,000. That's basically based on $120,000 over a period of 10 years. So with this kind of a portfolio that you can create, using ETF, it gives us a lot of flexibilities in terms of adjusting our risk, adjusting our expectation, adjusting our outcome. Now, whatever that we do, whether is it going to be an income or is it going to be a growth, it doesn't matter, okay? Because every one of us, we have a different risk tolerance, different level of knowledge. But one thing, do not leave cash in the bank. That is, you probably heard it from someone else as well, but it is true that do not leave cash in the bank, because if you leave cash in the bank, we call it in the financial world, there's a word for it. It is called poor man tax. All right, it's a poor man tax. So they basically tax you when you put money in the bank. Basically, you pay tax. And you know who is this taxpayer? You know who is this tax or not? Right, this tax is called inflation. All right, so this is basically what I would do for ETF kind of a management. ETF kind of investment strategy, and it will contribute part of Emin's earlier wealth accumulations program tools. And with that, I end these sessions. I'll be answering questions towards the end of this. And now I'll pass it back to
cannot achieve whatever we cannot measure. Okay, so to have a complete circle, you need to have what I call a milestone tracking system. Like you can see here, I actually need 1.4 million 20 years later. I can actually break down and calculate. So let's say I need 1.4 million 20 years later. 10 years, I need about 600,000. 5 years, I need about 300,000, and so on and so forth. Okay. And then after that, I will actually measure my portfolio value to see whether am I on track to hit my 1.4. Okay, so if you ask me, this is what investing is about. Set your objective, create a system, and make sure you measure, okay, to make sure you can actually achieve. Okay, and I hope we have emphasized enough going more and more. I think investment is now more of a need now. It's no longer for recreation, for entertainment. If you don't do this today, okay, there is a good chance that, when we retire, we may not have enough and we may need to lower our lifestyle. And like, for example, in my case, I do this on a monthly basis. In fact, now I'm actually quite happy. I probably won't need until 65 to hit my financial freedom. Hopefully, if things goes well, I think I just another 10 years. Then probably another 10 years later, you will stop seeing me sing and dance anymore. Hopefully that day will to come. Okay, I probably can hit my 1.4 earlier. So with this system that I have set up. Okay. Okay. Oh, by the way, for those who have any questions, keep the questions coming. I think we have a question from sorry, I can't pronounce Ng. We saw your question, so please bear with us for a while. We will address all the questions at the end of the session. So very good questions. For those who have more questions, please come in. Okay. So hopefully it's clear when we talk about investing, what actually is investing. Number one, clear investment objective. Please set it. And for all of us, we need to fight this monster called inflation. if you are really keen about being financially free, you should know what is the amount you need to be financially free, whereby passive income can cover expense. Okay, don't just tell me or more and more and more. No. Okay, what is this number? Okay, number 2, you have to set your different wealth accumulation systems. In my case, I have 6 of them. Okay, so investing is about setting all the system and invest in them regularly. Work this system so that all your money is generating higher return for you. It's not just about, oh, today I buy DBS, wow, make 50%, then the next day you lose everything. No. Okay, all your money consistently make money for you. And okay, you have the milestone tracking so that you're on track. And eventually, okay, once this is set up, you will achieve this state of what I call financially stress-free. You know that you have enough for today, you know that you have enough for unforeseen circumstances, and you know that you were enough for tomorrow. Okay, next, of course, I think a lot of people have this question. So how do I get started? Let's say you agree with us totally. How do I actually started? What do I need to know to actually get started? So to see this happening, to create, you probably need these 2 things. One is, of course, the knowledge. Okay, what is that wealth accumulation system you should adopt? Okay, what is the instrument you should take? Like, for example, I use a lot of stocks. Okay, so there are people who actually use more of property. Like for example, Jimmy is actually more of overseas stocks, more of ETFs. So each of us is actually quite different, and you need to actually know the different instrument. Then you know how to actually choose which instrument, number 1, and number 2, how do you choose among them? So let's say, for example, you decided to start up the top stock wealth accumulation system. How do you actually choose your stock on a monthly basis? So you definitely need knowledge. The other thing is this, discipline, okay? Discipline, okay? Again, like I mentioned, I've been a retail investment trainer for 10 years. I realized a lot of people attend a course or maybe 4-day boot camp, 3-day boot camp. After attend already, then that's it, do nothing, or eventually fail. So in fact, the way I see that if you just attend a short course, is more like learning how to swim on land. Okay, to me, being financially fit is same as being healthy. You cannot be just like, oh, one fine day, I just run 24 kilometers or run marathon. Then for the next 1 year, don't do exercise at all. No, okay, you actually need to work all this on a regular basis, and you need to have the discipline to make sure you put your money in on a regular basis. And this is why we saw that, knowledge, maybe you still say it's easy. I can actually go and Google, I can go and attend a short course. But a lot of time, having the discipline, I think that one can be a challenge for some. Okay, a lot of people invest only when they have time. No, cannot. It's just like saying, oh, I exercise only when I have time. No, then you can always be healthy. So this is the exact reason why we have this thing called the financial gym, to impart people with the right knowledge, to help people keep the discipline, and to really make sure your wealth accumulation system get implemented. Okay, that's the key thing. Wealth accumulation system get implemented. Okay, so in this financial gym, there's actually 2 main parts. One is, of course, get the knowledge, foundation training. So the foundation training come with, of course, a financial planning module, whereby we will help you really set the objective. Okay, so this have been very powerful and life-changing for some. There are people who thought that they are very comfortable, but after this process, they're like, okay, I need to change my lifestyle. One of the comment I will never forget is this, after this person do it, she said she will stop doing Taobao. She will stop buying things for Taobao already, So it's actually quite interesting for what we have gone through. Then after that, we have 4 other modules, okay, to actually share with you more about each different instruments. How do you choose these instruments, and how do you choose among these instruments? Should I invest in bonds? Should I invest in endowment? And if you decided to choose that, okay, REITs, then how do you select among REITs? So these are important knowledge you need to have, background information you have before you talk about creating wealth accumulation system. Okay, next is the keep the discipline. We actually have this thing called the monthly workout. So of course now it's actually done via webinar. Hopefully we can do live very soon. So this is where, you know, you really put your learning into practice. Where this online portfolio game, so every month we meet up, we say, okay, got $5,000 today. What are you going to do? Then we actually have this platform that you key in. Then after that, we track your real results. We track real result. Wow. Okay, you key in this. Then after that, next month, how much is actually going to be? Me and Jimmy also share with you how we actually deal with our $5,000. Okay, so this is what I mean by keeping a discipline, and we use the real result to actually show you our teachings. It's not like, oh, you should do this, you should do this, then you don't see us again. So this month I tell you, or probably I will consider ABC, and after that, next month you can see ABC, did the price increase, decrease. So this is our commitment now. We are not here just play. We want to stick with you for at least the next 1 year to really help you implement all these wealth accumulation systems. Okay, at the same time, okay, every month when we meet up, we try to do discussion. There are always new things happening. So we actually want to discuss the current affairs. We have invited speakers. The next one, yes, Alan. Alan's in the house. We actually got Alan to join us. He will actually share with us, I believe, it's about legacy planning. So end of the day, you know, the knowledge is never ending. Okay, nobody dare to say that you learn everything about investing. So we actually have this platform so that we keep growing for everyone, including myself. So in fact, now I actually learn a lot from participants as well. At the same time, we will keep contact each other via WhatsApp chat. Anytime you have any questions, ask us and we will respond ASAP. Yeah. And in fact, like for example, if you actually read this WhatsApp chat, so this was, I think, what happened last month, whereby the market suddenly dropped. Then we will come and tell you, hey, relax, don't worry. And true enough, the market rebounded very quickly. Okay, for those who actually want to have a sense of what is actually being discussed in the monthly meeting, okay, you may actually want to just scan the QR code right now. So there was one session, I think this was 2 months ago, when there was a request to learn more about Bitcoin. And Jimmy, you know, very gracefully go and accept the challenge, go and do a research on Bitcoin, and he actually shared, you know, to everyone about Bitcoin. Very interesting because it's very hard to grasp. A lot of people don't even know what does Bitcoin look like. It's so virtual. And yeah, you may actually want to check out this video. He can really explain to very easy for you to understand what exactly is Bitcoin and why is it investment instrument. So if you want to scan the QR code, you want to do it now. Okay. Like I said, there's no way you can find this video on YouTube. It's actually unlisted. So if you go YouTube, you can't find. The only way is to gain access via this QR code. So if you want, you can scan it right now. Okay, so as mentioned, this is not just a course. Okay, now this financial gym program is not just a course. It's actually a 1-year program. Okay, and this 1-year program, we have, as mentioned just now, basic modules, fundamental modules, and it actually get repeated every time. It's conducted once per month. So if you miss any session, you can just receipt. Of course, even if you didn't miss one to receipt, you're more than welcome to join us. Okay, but of course, please take note now, we share the same joke. Okay, and there's this monthly meeting. Okay, we meet up once a month, okay, to discuss all the activities we mentioned just now. So the discussion summary starts will be emailed out after each session. So basically now it's actually recorded. Monthly meeting is recorded. You can actually get the monthly meeting even if you don't turn up. So that is the arrangement right now until we go back physical meeting. Then maybe there's some other arrangement. If not, now it's all webinar. Yes, it's all recorded. So this is what I mean by our difference. It's not easy on us. We could easily just do a course, okay, tell jokes, everybody happy, then that's it. No, bye-bye. We want to be with you for the next 1 year. We want to see results. We want to make sure you grow. That is our dedication. Okay, and this monthly meeting, me and Jimmy will share exactly with you what we'll do with our $5,000. And you can track our results. If we are lousy, you can see. If you are good, you can see. Okay, So hopefully you can, sense what we're trying to do here. We're not just selling a course, that's it. No, we really want that you have the right mindset to investing and really hope you can create wealth accumulation system after this program, or in fact, during this program itself. Okay, the fees, you will realize that is actually very fair. Okay, we are talking about for the fundamental modules, $88 per module. You go and compare with your kids' tuition. So this is really nothing. So by the way, now my daughter per session, 2 hours is already like $100 over tuition. And we're talking about $88 per module. So in fact, my wife keep asking me, why don't I be a tuition teacher instead? Okay. Monthly meeting is even cheaper, $40 per session. And 12 session, that's $480. So the whole program worth $920, 1 year program. You go and compare with your Fitness First or whatever gym. Okay, I think it's even more affordable than that. Now, whatever the value of this program is, the question is it worth it or not? Okay, I'm actually going to share with you one tip right now. This is a real tip. This is a real tip. So what if in our program, you pay this $920, I just learned another tip. Okay, so now here is the thing. What you are seeing here is the real statement of one of the participants, real CPF statement, and this is the annual interest they're actually getting from the special account per year, every year. Okay, now this tip is very simple. Okay, if let's say, for example, today you have 50,000 in the FD doing nothing, and you are very sure that you only need this money, okay, for your retirement, why not put this money into your SA account now? Yeah, so every year your interest increase by about 1,500 per annum. Of course, may not be everybody, because this 50,000 is locked in. But let's say you're very sure that you won't need it is for retirement, then why don't you just be in the SA right now? Every year get 1,500. Just this tip alone, I think is you'll make way more than the 920 you are going to pay for it. And of course, throughout the whole 1 year, you probably learn, I don't know, 100 over 2,000 or 1,000 over such tips. Okay, so is it worth it or not? You may actually want to ask. So by the way, if you want to do this, you can actually put as member. There's actually this for you to choose this option, top up my own or recipient SA under the retirement sum. Okay, so you actually have this option. Okay, now let me just recap what is in the program. Financial Gym 1 year membership, 920. 5 times 2 hours of foundation training, 10 hours in total. 12 times 2 hours of monthly facilitated meetings. You have unlimited makeups of foundation training within the membership period. WhatsApp group discussion summary. So basically all is recorded, will actually be emailed to you after the session. And to thank you for joining us, for still staying us now throughout the whole preview. We have a little discount, for you, $799. Just a show of appreciation for staying throughout. And please take note that this is only for the first 10 sign up only. For the first 10 sign up only. If once we hit the 10%, sorry, the coupon code will not work. Okay, we have another option for you. I know some of you may actually want to take a little bit more time to consider. So maybe you want to join the foundation module first. Okay, so taking up this 5 module first. Okay, 5 times 2 hours of foundation training, unlimited makeups. Okay, we are happy to give you unlimited makeup. So let's say you miss any of session, you can come back again. Okay, we are also happy to give you the WhatsApp group. Okay, and again, to thank you to be here after, still be here right now. Okay, preview special 329. Okay, 329, get the skills or knowledge for investment, which may probably help you to have a more dignified life when you retire, or either that help you to achieve financial freedom. Is it worth it or not? So I think you have the answer. Okay, so I have actually been quite lucky and blessed. Like I said, for the past 10 years, I have been an investment trainer full-time. I have, of course, some of you know me from SGX. I have started doing stocks investment trading. I still do. And I'm very glad that, in my programs, I do have monthly meetings, money gathering, and a lot of people have supported. Along the way, I've also helped a lot of people to be financially stress-free. So really hope that you can join us, join this movement to be financially stress-free, and you should start your journey today. Okay, so as promised, we'll have a Q&A session. We have some questions in already. Thank you so much. Of course, for those who have still have questions, please key in the questions now. We'll be very happy to answer you. At the same time, okay, if you actually want to register, okay, I will strongly urge you to register now, because only for the first 10 signups. Okay, register now. If you actually want to do so, you can actually scan on this QR code. Okay, for the Financial Gym 1 year, scan this QR code, and to get the preview discount, okay, you just key in this discount code. So once again, this is the only place you can find the discount code. You cannot find anywhere else. And this discount code will be deactivated after the first 10 have used. And if you just want to go for the function bodies only, scan this QR code, and this is the discount code. Okay, I will actually share a link onto the chat as well.